Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Thursday, the 24th day of September 2015, and this is the daily report for gold and silver. We do have gold up sharply today, trading up roughly $23.50 on the day, a 2% gain, currently trading at $11.53 and change. Low today, $11.29.99, just off of the highs at $11.56.72. Of course, we will have Janet Yellen giving a speech roughly in about 25 minutes from now. Markets are reacting to a couple of things. Also, we sent out a special trade alert this morning. I want to go over rationale behind sending that alert, that trigger out. I also want to talk about our stops as well as our upside target. We'll do that all on today's daily report. So traders, I want to start today's show by taking a look at our daily chart, standard candlestick format containing one basic retracement, the retracements from this top up at 1171 down to the lows that we hit, which were roughly at 1071, a $100 rally. From there, we retrace. Now, we retrace more than 61%. The 61% retracement would have been around 1110. That's been a critical number and actually came in at that century mark. 1100 is where we hit a low. Started to trade higher, but it hit some real resistance roughly at 11, call it 1140 in this area. Market came down and did, in fact, find support. I thought we might find support a little bit lower. I thought it might go and test this one area, 1110, for a second time. It did not. We noted on yesterday's show a couple of things. The first thing was that we had what is basically called tweezer bottoms. It's a candlestick pattern. It's simply equal lows. And that's what we saw there. So I pointed out the fact that we really did see some support in the marketplace itself. And also, in terms of a two-day pattern, we could identify a piercing line. Now, if you recall from yesterday's show, what I mentioned that a piercing line in it of itself cannot be taken as a standard candlestick call without confirmation. The confirming candle on any bullish reversal is going to be a long green candle with a higher high and a higher low than the previous day. We certainly met that criteria. We flashed right through 1133, which is the 38% retracement right in here, and even the 23% retracement at 47. Now, I just wanted to see how this market was looking into the close, and we certainly got a strong finish, closing near the top of the market. Of course, spot is still trading for a little bit, currently at about 53. Traders taking that call. We're in at 1151, 1152 in that area. Our stops are below 33. Obviously, the rationale for the stops is to place it below the basic 38% resistance line, and I believe that that should be a supportive area. We also want to look and make sure that it maintains above 47. That's another number, but certainly not as critical. Now, also, in terms of my upside target, my current upside target, really I believe that we will probably take a stab at these highs here at about 1171, so another, call it $20 from here. And that's simply based upon the fact that when we take a look at the decline in the marketplace, our first rally up, we get a correction, so that's a wave one, a wave two. This being a wave three is going to, if in fact we're in any kind of a bullish mode, exceed the top of 70, and so that's my initial target, is going to be around 1170. Now, that's our short-term view. So traders, we're approximately 5-10 minutes before Janet Yellen will come on and give a speech. Now, I want to take a look at our longer term view in the marketplace today. And to do that, I really needed to pull up this monthly chart. It's certainly not something that you would trade off of, but it is something that we look at for defined and most important areas. Two basic retracements. First retracement accounts for the entirety of the move, in which back in 2001, 2002, we saw the market trading roughly at $300. This is starting at $265 up to the record top. That is the entirety of this bull run. There's been a couple of legs within this bull run, meaning we've got a wave three right in here. And when we look at that, it's broken up to a component of 1, 2, 3, 4, 5, this being a counter wave 4, and this starts our fifth wave up right here, and that's our second retracement level. Now, when we look at these two different retracement levels, we are really given some really important numbers. Now, the first critical number is a 50% retracement at 1092, and that 1092 matches up quite eloquently with the bottoms that we saw recently as this market sold off. The second is a 61% retracement of the smaller move, roughly at around 1151, 1152 in that area. And that's the area that I wanted to really see taken out, because once we take out that area, it tells us that we're still above a price point or a target on this particular wave up, which could make a model for a corrective wave down followed by a move back up. In other words, a sizable move. And I'm not looking at this over any kind of short period of time. I'm looking over the next couple of years. But the potential, the real potential that we have finally weathered the end of this corrective period and we're moving into a much more bullish period in gold. That is what I'm looking at. And that's why this area is so critical to really start positioning ourselves on the long side in the gold market. And traders, lastly, I do want to take a look at an interim view of the market. Market's currently trading roughly at 1153, 1154, 1153.80 is our current print. It is just at a 21-day moving average. And that is one thing that is effectively pretty strong. That's this yellow line here. Also, when we look at our moving average convergence divergence, you can see that the fast line has just crossed above the longer standing long-term line on the MACD. And also, when we look at the momentum of that, which had been negative, it has now gone positive. So these are the factors that we looked at when we did actually issue our buy signal this morning. We've talked about our stops in terms of where they're at and why they're at that point. We also talked about our initial upside target, which is to take out the previous high of 1171. So that's really what we're looking at on this current trade. This has been Gary Wagner, wishing you, as always, good trading, and we will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.